Okay, so you're thinking about getting into Forex trading.
Hmm.
You've heard about the risks, heard about the rewards,
Mm.
but where do you even start with this whole thing?
Well,
It
yeah.
can be a little overwhelming.
It can.
Well, that's what we're here for.
Yeah.
In this deep dive, we're going to break down a Forex 101 course
Okay.
that's made for beginners, just like you.
Mm-hmm.
And we're going to extract the juiciest bits,
The good stuff.
the really fascinating stuff.
Yeah.
We're going to talk about what Forex even is
Mm-hmm.
and why it's such a big deal.
Big deal.
Who are all the players?
Okay.
How do things like politics or
Yeah.
the economy affect currencies?
Yeah.
And the big one, what are the tools and strategies that
Okay.
traders actually use?
Yeah.
Forex can seem a little intimidating at first,
It can.
but we're going to break it down into
Okay.
nice bite-sized pieces.
Nice and easy.
So first off, what is Forex?
Forex is the world's largest
Okay.
and most liquid market. Trillions, with a T, of dollars are exchanged daily.
Trillions.
Trillions.
That's almost impossible to grasp.
Right.
So what does that volume mean
Yeah.
for someone who's just starting out?
Well, think about it this way.
Okay.
With that much action going on,
Yeah.
there are constantly new chances
Hmm.
to buy or sell currencies.
To make a profit.
Right.
So Forex is massive,
Yeah.
clearly.
Huge.
But what makes it so different
Okay.
from, say, the stock market?
One of the biggest differences is that Forex is completely decentralized.
Okay.
So, unlike the stock market,
Mm.
there's no central exchange
Interesting.
that's calling the shots.
So there's not one single place
Nope.
where all the trading happens.
Not at all.
Huh. So who is doing all the trading?
It's a global network of banks, institutions,
Okay.
and individuals.
Individuals.
Individuals like you and me
Wow.
trading directly with each other.
So it's kind of like the Wild West of finance.
Yeah, that's a good way to put it.
A little scary,
Maybe a little.
but exciting.
Very exciting.
So we've established that it's huge,
Yeah.
it's decentralized,
Okay.
but how does the actual trading work?
Okay, so imagine you're on vacation in Europe
Okay.
and you're exchanging your dollars for euros.
Uh-huh.
You're essentially
Okay.
doing a mini version
Right.
of a Forex trade
I see.
at its core.
Yeah.
It's all about buying one currency
Uh-huh.
and selling another
Okay.
simultaneously.
Hmm.
These currencies are
Yeah.
traded in pairs,
Like what?
like the euro
Okay.
and the US dollar,
Okay.
written as USD.
Your AISD.
Okay. You're essentially betting
Okay.
on whether one of those currencies
Yeah.
will go up or down.
Against the other one.
Exactly.
So if I think the euro is going to weaken
Yeah.
against the dollar,
Uh-huh.
I would buy dollars and sell euros.
That's right.
And if I'm right, I make money
Yeah.
from that change
Yeah.
in the exchange rate.
Yes, exactly.
And this all happens 24 hours a day.
Well, 24 hours a day,
Okay.
5 days a week.
I see.
The Forex market never sleeps.
Wow, that's wild.
It spans all the time zones
Okay.
across the world.
So it can't just be everyday people
Right.
making these trades?
No.
Who are some of the bigger players?
Think of Forex as a giant theater
Okay.
with a really diverse cast.
Hmm.
You've got your central banks,
Okay.
commercial banks,
Ah.
hedge funds,
Hedge funds. Okay.
institutional investors,
Wow, that's a lot.
and of course, retail traders.
Like me?
Ugh.
The central banks sound like the big guys.
They are.
What do they do?
Central banks, like the Federal Reserve in the U.S.
Okay.
or the European Central Bank,
Uh-huh.
they have a huge influence
Oh.
on the market.
I see.
Their decisions on things like interest rates
Mm.
can create huge shockwaves.
Shockwaves
Yeah, big ones.
across the entire system.
The whole thing.
So if a central bank decides to, let's say, raise interest rates, what does that actually look like in the market?
Okay, so imagine a country
Okay.
suddenly offers a higher interest rate
Go.
on its savings accounts.
Hmm.
It becomes really attractive
Okay.
for foreign investors
Yeah, I see.
to put their money there.
Because they're going to make more money
Exactly.
on their investment.
Right.
Okay. Interesting.
That increases demand for that country's currency.
Go.
And that pushes the value up
Mhm.
compared to other currencies.
I see. So there's a direct relationship
There is.
between interest rates and currency values.
That's right.
What about commercial banks?
Oh, okay. So commercial banks are essential
Okay.
because they're the ones that handle the vast sums of money.
Huge amounts of money.
Huge.
Right.
That flow through
Yeah.
all the international transactions.
So they're the ones that are actually like
Yes.
moving the money around.
They're the facilitators.
Facilitators who
Yeah.
can make all those transactions.
Yeah.
It's possible.
From businesses
From businesses
to tourists.
To invest.
to investors.
Okay, got it.
They're making it all happen.
So then you have hedge funds.
Hedge funds.
Aren't those the guys that are making those
Yeah.
high-stakes bets that can either win big or lose big?
That's them.
Like millions or even billion?
Billions, yeah.
Wow.
They're the risk takers.
Oh.
They're looking for the big wins.
Uh,
Sometimes they take big losses.
yeah, I've heard stories.
We've all heard stories.
So they can actually move markets
They can, especially in the short term.
with their trades.
Right.
And some of them might even be using algorithms
Yeah, a lot of them are.
to make trades, like instantly.
Yeah, high-frequency trading.
Okay.
It's a big thing now.
So you got your central banks,
Yeah.
you got your commercial banks,
Uh-huh.
you got your hedge funds.
Risky business.
What about institutional investors?
Okay, those are the giants of the
Yeah.
investment world.
Give me some examples.
Think pension funds,
Okay.
insurance companies,
Uh-huh.
sovereign wealth funds.
Okay.
They manage these huge portfolios, and their trades can really impact
Okay.
currency valuations.
Wow. So it's like I'm sitting here
Yeah.
at my computer
Mm-hmm.
trying to make a couple bucks,
Couple bucks.
and I'm competing with these giants.
Right.
It's a little daunting,
It can feel that way.
but I can still participate.
Absolutely.
Really?
Yeah, don't underestimate
Okay.
the power of the individual trader.
Okay.
Retail traders might not move markets
Right.
like the central banks,
okay.
but they're a vital part
Right.
of the overall liquidity
Uh-huh.
of the market.
So we all kind of contribute
We do.
to this big complex system.
Exactly.
So all these players
Mm-hmm.
are trading currencies,
Yeah.
but what makes those values actually change?
That's where we get into fundamentals.
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 Yeah.
These are the economic and political forces
Hmm.
that underpin
Okay.
the value of a currency.
So give me an example.
Okay, let's say
Okay.
a country releases its GDP report,
Which is,
a measure of its economic output,
okay, got it.
and it shows that the economy has grown
Oh.
more than expected.
So that's good.
It's very good.
It's a sign of a healthy economy.
Exactly.
Okay.
Investors see that. They like what they see.
Yeah.
So they pour money
Okay.
into the country,
Mm-hmm.
driving up demand for its currency.
And that makes it more valuable.
Exactly.
So a strong GDP report
Yeah,
could be a signal to buy that currency.
that's right. It's
Instantly.
all about understanding the
Mhm.
underlying forces
Oh, for
that
sure.
drive those markets.
And politics must play a role too, right?
You bet it does.
What kind of role?
Political events
Okay.
and instability
Yeah.
can cause a lot of uncertainty
Okay.
in the markets.
I see.
For example, if a country is experiencing some kind of political upheaval,
Like what?
like maybe an unexpected election result
Mhm.
or a major policy shift,
Okay.
this can make investors nervous.
Oh.
They don't like uncertainty,
Right.
so they might pull their money out,
Hmm.
which weakens the currency.
Wow. So it's not just numbers on a screen.
It's not.
It's real world events
Exactly.
that are shaping these markets.
That's what makes it so interesting.
Yeah, I'm starting to see that.
It's dynamic.
It's interconnected.
global.
It's fascinating.
It is.
So for someone who wants to trade Forex,
Yeah,
staying informed is key.
absolutely crucial.
Got it.
Knowledge is power.
I like that.
Especially in this market,
I bet.
things change quickly.
Okay, so we've got these fundamentals.
Uh-huh.
We've got all these different players.
Right.
But how do traders actually make decisions?
That's where we get into
Okay.
fundamental analysis
Okay.
and technical analysis.
Mhm.
Two very different
Okay.
but valuable perspective.
So fundamental analysis is,
It's like being a detective.
okay.
You're digging into economic data.
Okay.
You're looking at political pronouncements.
Uh-huh.
You're analyzing global trends.
Wow, so you're looking at the big picture
The big picture?
to try to figure out
Yes.
where a currency is headed.
Exactly. They're trying to find clues
Okay.
about whether a currency is overvalued or undervalued. And that helps them decide
Okay.
when to buy or sell.
Got it.
So it's a more strategic approach.
Long term.
Long term.
Okay, and technical analysis is more.
It's more about
Hmm.
studying the charts,
Okay.
looking for patterns.
Interesting.
They believe
Yeah.
that past price movements
Uh-huh.
can give us insights
Okay.
into future price behavior.
So they're trying to find
These are
visual cues
visual cues, exactly.
in the charts
Yeah,
that
yeah.
tell them when to buy or sell.
That's right.
So which one is it better?
That's the thing.
Okay.
Neither one is necessarily better.
Hmm.
They both have strengths.
Okay.
They both have weaknesses.
I see.
It depends on your trading style,
Okay.
your risk tolerance,
Hmm.
and your time commitment.
Okay, so it's more about finding
It is.
the right approach for you.
Exactly.
Okay, that makes sense.
Good.
So we've talked about the sheer size of Forex.
It's huge.
We've talked about the players.
Just of characters.
And we've talked about the forces
The fundamentals.
that make it all tick.
Yeah.
It's been a whirlwind
It
of information.
has to take in.
But before we move on,
Okay.
I want to leave you with something to think about.
Okay, I'm listening.
We've discussed how economic data,
Mm.
political events,
Yeah.
technical signals
Right.
can influence the market.
They all play a part.
But what role do you think psychology plays?
Ooh, interesting.
How do you think emotions and biases
Yeah.
affect the decisions traders make?
That's a great question.
Something to think about
Yeah, I like that.
as we continue our deep dive next time.
I'm looking forward to it.
Me too. Welcome back. It's amazing how much we covered in part 1, right?
It's a lot to take in.
But I think we're starting to get a feel for how this whole Forex thing works.
Yeah, we're building a good foundation.
So last time we were talking about those fundamentals, the economic reports, the political news,
Yeah.
that can really move the markets.
It's wild how interconnected it all is.
It really is.
Like one big global web.
Totally. So let's dive a bit deeper
Okay, sounds good.
into those economic indicators we touched on.
Okay.
Things like GDP growth, inflation, interest rates.
The core stuff.
Yeah, the core stuff. So GDP.
Gross domestic product.
Right. That's essentially a measure of a country's economic output,
That's it.
the total value of all the goods and services produced.
Exactly.
Okay, so let's say
Mm.
you see a report that says a country's GDP
Yeah.
is expected to grow significantly.
Okay.
What happens then?
Well, that's a really good sign.
It is.
It suggests a healthy economy,
Okay.
one that's expanding.
So investors might be like,
They get excited.
hey, let's put our money there.
Exactly. They see opportunity.
Okay.
And that influx of investment
Yeah.
creates demand for that country's currency,
Okay.
which drives up its value.
So if I'm a Forex trader,
Uh-huh.
a strong GDP forecast
Yeah.
could be a sign to buy that currency.
It could be.
Interesting.
It's all about anticipating those trends.
Okay, makes sense.
Now, what about inflation?
Ooh, inflation. That's a big one these days.
It's always a concern.
Yeah, prices going up everywhere.
Right. It erodes the purchasing power
Okay.
of a currency.
So my money buys less stuff.
Exactly. If a currency is losing value quickly,
Yeah.
you need more of it
Okay.
to buy the same things.
I've definitely noticed that.
Yeah, we all have.
So high inflation,
Yeah.
that's bad for a currency.
Generally, yes.
Okay.
Investors tend to avoid
Right.
countries with high
They
inflation.
want stability.
They do. They want their money
Okay.
to hold its value.
So high inflation
Yeah,
could be a sign
it could be.
to sell that currency.
Potentially. Yeah.
Interesting. So we've got GDP growth.
Right.
We've got inflation.
Right.
What about interest rates?
Ah, interest rates.
The big one.
A big one, controlled by the central banks.
Right. And we talked about how their decisions can really,
Make waves.
make waves in the market.
Absolutely.
So remind me again,
Okay.
how do interest rates actually affect currencies?
So when a central bank raises interest rates, they're basically making their currency
Okay.
more attractive to foreign investors
Foreign investors. Okay.
who are looking for higher returns.
Because they can earn more interest
Exactly.
on their investments.
Right.
Got it.
So that increased demand
Yeah.
pushes the currency's value up.
Okay. So higher interest rates
Generally,
lead to a stronger currency
that's the general idea.
and lower interest rates
Could weaken the currency.
because it's less attractive to investors.
Right. They can find better returns elsewhere.
Makes sense? Okay. What about unemployment?
Unemployment is a key indicator
Okay.
of a country's economic health.
So high unemployment means...
It can signal a struggling economy,
Oh, right.
which can scare off investors.
Right. They don't want to put their money there.
Exactly. And that can weaken the currency.
But low unemployment?
That's a good sign.
A strong economy,
Okay.
which could attract investment?
And boost the currency.
That's right.
So as a Forex trader,
Yeah.
I'm constantly watching these reports,
Yo,
looking for clues
losing signals.
about which way a currency might move.
Exactly. It's like a puzzle.
Yeah, it
They're
is.
trying to put all the pieces together.
It sounds like a lot to keep track of.
It can be.
So are there any tools
There are.
that can help me stay organized?
Have you ever heard of economic calendars?
I think they were mentioned in the course.
They were. But I didn't really understand what they were for.
Economic calendars are essential.
Okay.
They provide a schedule of
Fun.
all the upcoming
Uh-huh.
economic data releases
From different countries?
from all over the world.
So I can see
Yeah.
when the U.S. is going to release its jobs report.
Exactly.
Okay, that's pretty useful.
It is. It helps you stay ahead of the curve.
I like it, like a roadmap.
Yeah, like a roadmap for the economy.
Okay, so we've got the economic side,
Uh-huh.
but we can't forget about politics.
We can't. It plays a big role.
We talked about how instability can weaken a currency.
Right. Uncertainty is never good.
But are there any other political events
Oh, there are plenty.
that can impact the markets?
Elections, for example.
Oh, yeah, that makes sense.
Investors get nervous.
Okay.
Not sure what policies
Right.
the new government might implement.
And then you have,
Policy decisions.
like what?
Changes in taxation,
Okay.
trade agreements,
Hmm.
all sorts of things.
So it's like a giant chess game.
It is, very much so.
Every move has consequences.
Absolutely.
And we're not just talking about individual countries here.
No, it's global.
So like a conflict
Yeah.
in one part of the world
Mm-hmm.
could affect currencies
It could.
somewhere else entirely.
Remember that web we talked about?
I do?
A tug in one strand
Yeah.
can affect the whole thing.
Wow, this is starting to feel very real to me now.
Good. It's about understanding those connections.
Not just abstract concepts anymore.
It's not. It's about real-world events.
Shaping the financial landscape.
That's what makes it so fascinating.
Okay, so we've got these fundamentals.
Yeah.
But how do we actually use this information
Okay, that's the next step.
to make trading decisions?
Right.
We've talked about fundamental analysis
Mm-hmm.
and technical analysis,
Yeah.
but I'm ready to see how it all comes together
Okay, in part 3,
in part 3.
we'll get into the trading itself.
Sounds good. I'm excited. Welcome back to the final part of our Forex deep dive.
The grand finale.
We've done the groundwork, learned about how the market works,
Yeah, we've covered a lot.
the forces that drive it, the different approaches traders use,
Mm-hmm.
and now it's time for the fun part,
Let's do it.
the actual trading.
The exciting part.
So in the Forex 101 course, they talked about different types of orders.
Right, different ways to execute your trades.
And I got to be honest, they sounded a bit confusing,
They can be.
like a whole other language.
A bit like that.
So let's break them down.
Sounds good.
Let's start with the basics.
All right.
What is a market order?
Imagine you're at a market, right?
Okay.
And you see some fruit you want.
Mm.
The price is good.
Yeah.
You just want to buy it.
Okay.
No haggling, no waiting.
Right.
That's a market order
In Forex,
in Forex.
you're telling your broker,
Uh-huh.
buy or sell
Right now.
at the best price available.
Exactly, the market price.
So if I see a currency pair moving the way I want,
Yeah.
I can just jump in with a market order.
You can. Simple as that. It's the fastest way to enter or exit a trade.
Okay, but prices change quickly,
They
right?
do, especially in a volatile market.
So I might not get the exact price I saw
That's possible, yeah.
when I click the button.
It's the nature of the market.
So what if I want more control
Okay.
over the price?
That's where limit orders come in.
Limit orders.
Think of it like setting a price target. Let's say you think the euro is going to weaken.
Against the dollar.
Yeah, but you're not ready to sell just yet.
Okay.
You can set a limit order
Okay.
to sell your euros.
At a specific price.
Exactly, when the market hits your target,
Even if I'm not watching.
even if you're asleep.
So it's like putting in a reservation
It is a bit like that.
at a restaurant.
Yeah,
I'm securing my spot
right.
at the price I want.
Without having to constantly monitor the market.
I like that.
It's a good way to manage trades.
Now, what about stop orders?
Stop orders are your safety net.
Okay.
They protect you from big losses. You set a specific price level,
Okay.
and if the market hits that price,
Yeah.
your order is triggered automatically.
So it limits my losses.
Exactly, like a fire alarm.
Ooh. I like that analogy.
If things get too hot,
Yeah.
the alarm goes off,
Then I get out.
you get out.
Oh, no.
Stop orders are crucial for risk management.
Okay. I'm seeing that.
It's easy to get caught up in the excitement,
Yeah, I bet.
but stop orders help you stay disciplined.
Got it. And then there are stop limit orders. Right?
Those are a combination of
Okay.
stop orders and limit orders.
Oh, what do they do?
It becomes a limit order
Okay.
once the stop price is reached.
Hmm.
So you're setting two prices,
Okay.
one to trigger the order
Yeah.
and another one to control the price.
I see.
It gives you even more control.
But it sounds more complicated.
It is a bit more advanced.
Okay, so now we've got our toolbox of orders.
We do.
But how do we actually use them to make money?
All right, let's get into strategies.
Yeah, let's talk strategy.
So imagine you're a fundamental trader.
Okay.
You've been doing your research,
Looking at reports,
Yeah.
analyzing data,
the whole 9 yards,
and you believe the euro is going to weaken?
against the dollar, let's say.
Okay, what's next?
You might consider selling euros.
And buying dollars.
Right. But instead of rushing in,
With the market order
you could use a limit order.
to sell at a specific price.
Exactly, one that aligns with your analysis.
So I'm waiting for the market to come to me.
You're being patient.
Okay. And I'm also setting a stop-loss order,
Of course, always protect yourself,
just in case things go wrong.
just in case.
So that's the fundamental approach.
For one example, yeah.
What about technical traders?
They might look for patterns in the charts,
Like what?
like a double top.
A double top, what's that?
It's a pattern
Right.
that often signals a reversal
Okay.
in an uptrend.
So they'd wait for the pattern to form
Yeah, and confirm it with other indicators.
before making a move
Exactly. They're looking for those visual cues.
to tell them when to buy or sell.
That's right.
So it's all about finding those opportunities,
It is, and managing your risk.
because Forex can be risky.
Right. It definitely can be.
What are some of the biggest risks?
Volatility is a big one.
Volatility meaning?
Prices can change quickly
Okay.
and unexpectedly.
So even if I've done my research,
Yeah.
the market can still surprise me.
It happens all the time.
So risk management is essential.
Absolutely crucial.
And stop-loss orders are key
They are your best friend.
to limit those losses.
Right, to protect your capital.
Got it. And position sizing too, right?
Yes, position sizing is important.
Right.
How much you invest in each trade.
Okay.
Don't put all your eggs in one basket.
Diversify, spread the risk.
Exactly.
Okay, so Forex trading,
It's exciting.
it's complex,
It is.
but it's also about
Yeah,
managing risk,
absolutely.
being disciplined,
Mm.
and constantly learning.
The learning never stops.
We've covered a lot in this deep dive,
A lot.
from fundamentals to technicals,
Orders, strategies, risk management,
the whole shebang.
the whole shebang.
But I think we've laid a good foundation
A good starting point.
for anyone who wants to learn more
Jeff,
about Forex trading.
it's a fascinating world.
It is. Thanks for joining us.
My pleasure.
And happy trading, everyone.